Good afternoon, ladies and gentlemen, and welcome back to the Stockcharts TV studio here in a bright and sunny, beautiful Redmond, Washington. My name is Grayson Roze, Chief Strategist here at Stockcharts.com. Wonderful, as always, to be back with you, especially today, because I am joined for another monthly Top 10 Stocks to Watch episode with my good friend, Mr. Dave Keller, Chief Strategist at Sierra Alpha Research. Dave, across the desk, how are you? Always good to see you.
Good to see you too. Good to be back in the studio.
Yeah, we got a market that's keeping us entertained, as always.
Yes.
We got some interesting things happening. Before we touch on our top 10 stocks to watch, I do want to jump into market conditions, talk a little bit about kind of the vibe of what's going on right now.
Yeah.
And specifically, I want to talk about something that you were saying before the show. We were catching up a little bit, asking each other about how we're feeling about this market, and you had a really interesting phrase about sort of how the character of this market. You were relating it back to flying.
Always.
Give me the phrase.
Yeah, so this market, if you look at the market from the April low to where we're at now at the end of May, the trajectory of the market matches very closely the flight path when you're flying and you try a power on stall.
Power on stall.
And what this is, basically you take off, and when you take off the ground because the wings produce lift, the air hits the wing and pushes the plane in the air.
Right.
And if you tip the angle too far up, you basically make it so the wing doesn't produce lift anymore, and if you do it wrong, you go down very quickly. And if that happens during takeoff, it's not good because you're very close to the ground. So you are taught to go up in the air and go through training to sort of understand what it looks like and feels like. And so here's what happens. What's happened with the market off of the April low, we had this incredible acceleration, this arguably unsustainable pace off of those lows, right? I mean, we're gaining a ton every week. But then over the last couple weeks, we've basically stalled out, right? We're not gaining altitude anymore. We're sort of in a time correction. We're not losing a lot of altitude, but we're just sort of in a sideways move. Yeah. And this is exactly what a power on stall looks like just before it gets really bad. So if you're a well-trained pilot, what you learn how to do is just you not lose a ton of altitude, but just sort of improve the conditions, and then you can regain altitude. You can sort of start the climb again. And I think if the S&P can push above kind of that 59, 56,000 area, that sort of confirms the fact that this was a time pause. This was a pause in the trend. We've hit play again. We're gaining altitude. The way this goes poorly is if you don't execute a power on stall well, you start losing altitude, the nose tips down. And I think the 200-day moving average is such a clear place where that happens. So we're really at sort of a neutral, I would say, sentiment, right? I mean, if you look at the conditions here, I don't think it's totally clear from a technical perspective that this uptrend just resumes. I think that is, I think for the bulls to prove that it's going to sustain. I could see that happening. I could see a breakdown equally as possible, though, and arguably more likely given some of the changes we've seen in leadership. And I think defensive sectors doing well today, doing well earlier this week, has me, a bit of a red flag in my brain because of that.
Yeah. I like that you mentioned the unsustainable kind of rate of that climb that we saw off those lows. I mean, to me, this market, the things that are kind of hanging over this market's head, resistance and pace. You have a market that's just running too far, too fast. We need that to pause at some point. Yeah. If it can do that and kind of hit that reset and then continue to climb higher, like you're saying, if you execute the power on stall, then that's great. But we're also running into resistance. And if that resistance turns into, real resistance that's going to push the market back lower, that starts to become definitely a headwind for this thing. So.
And totally. And I would say when you think about how conditions have changed from like mid-April to late May, the breadth conditions have, long-term breadth still pretty good. We looked at like the bullish percent index is still great. Most stocks above their 200-day moving average, or at least enough, so that's good. But the short-term breadth, like the McClellan oscillator breaking below zero, advanced decline data this week has not been particularly strong. You've had some big down days. Yeah, definitely. But I think the leadership is crucial, right? What's happened from over the last 6 weeks, technology, industrials, consumer discretionary, those are your top three sectors over the last month, all outpacing the S&P. Those sectors all at the bottom of the leaderboard today, right? And it's more defensive sectors. So I think more of a rotation going into June. That's a concerning development that we've not seen since the April low.
It's funny, one of the things that I love to do every day, but especially every week, is just scroll through charts of the sectors. Yeah. And I've got that in a chart list on Stockcharts. And what I try to do as hard as I can is not pay attention to what the name of the sector is at first. I'll scroll down to that next chart, right? Because they're just kind of all in a stack. and I'll say, okay, what is this? How does it look? And then I'll look at the name of the sector.
Love it.
And it's always funny when you scroll down and you go, oh, wow, this thing looks great. This sector looks beautiful. It's starting to break out. This is lovely. And then you look at the name and you go, utilities. Great. Oh, I'm so glad that utilities are about to break out.
And you know what's funny is that is a beautiful way of avoiding confirmation bias, which is that classic issue of the moment you see it's technology, I'm bullish on technology, I love AI, and then that clouds your analysis of the charts.
Comes into your judgment.
You want to analyze the chart first and then think about the implications.
Exactly.
So thumbs up behavioral,
there you go.
addressing your behavioral biases, Grayson.
Yeah.
Well done.
So we're going to jump over to our top 10 stocks to watch. Before we do that, though, I want to remind all of you guys that are watching, the tools and features, the whole toolkit that Dave and I use on a daily basis, on a weekly basis, the things that we rely on to make these decisions, to follow the charts, all that stuff, it's all on Stockcharts, and you got to be a member to really, truly take advantage of these tools and features. So if you are not currently a Stockcharts member, remember, go to stockcharts.com, hit that big green button up at the top of any page really around the site. You can sign up for a free 1-month trial. Take advantage of all these tools and features that we're talking about. We just mentioned something called chart list, scrolling through the sectors, looking at chart lists, something that we both use on a daily basis. Absolutely. Almost, probably on a minute-to-minute basis. I spend most of my day in chart lists.
Right.
So these kinds of tools and features, make sure that you're taking advantage of those. Sign up for that free 1-month trial at stockcharts.com. With that out of the way, I think we dive right in. You want to take it away? You want to go first?
For sure. I'm going to start on the short side, which is a little unusual.
I wore my shorts just for this, so that's good.
We usually don't traffic in shorts. It's that time of year, I guess, so we'll do it. I've got a couple short ideas and then long ideas to finish out the rest. But so I'm going to start with Celsius Holdings. This is, makers of high energy, high caffeine, high sugar kind of drinks. Full disclosure, I have tried a Celsius drink once. I couldn't finish it. It was a little too
sweet for you?
It was a little too caffeinated for me, and I already drink coffee, as you know, because we've grabbed coffee around the office before. Right. I was a little concerned about the amount I was going to take in. However, the chart looks pretty compelling. What concerns me about the chart of CELH now is we're getting into what I would say is a classic, bearish momentum divergence, right? CLH has had a major low in February, so the market's sort of bottomed out in April. This bottomed out in February, so accelerating off the low, you see some improving relative strength, which is encouraging. But what's happened in the last couple months, we're continuing an uptrend, but on weaker momentum. And so when you have, names that are sort of leadership names that are kind of working, they're making higher highs and higher lows. I think a big part of where technical analysis can add value is look for signs of exhaustion. Look for signs that we're sort of nearing the end of that move. And what concerns me about Celsius as we've gotten closer and closer to $40 a share where we hit in mid-May, that secondary high is now weaker momentum. So earlier in February and March, we're making higher highs on stronger momentum. Now that's starting to change. Now, it's not a broken chart, and I would say overall this chart is still good. And I'm going to assume a chart like this is innocent until proven guilty. So I like the fact that we pulled back to an ascending 50-day moving average. That's not bad. But my early warning signs are sort of firing here. Yeah. So the way that I kind of approach this, and I don't have a position in Celsius at the moment, but if I did, I would either be lightening up here just because of that potential for exhaustion, or I would be making sure I had a really good updated stop and just make sure that I lock in any of those gains. If I bought it like a February low and I'm sitting on a decent profit, this is the time where I'd make sure my money management approach is clearly defined. So not broken yet. But again, thinking of the big picture, names like this that have done quite well, starting to show some divergences, tells me maybe we're at an exhaustion point to be determined. Yeah. But that's chart number one for me. I'm probably more playing this on the short side in this environment.
Okay, I like that. Now, I got to ask you, so if you put on a trade on the short side on something like this, I mean, I'm looking at a name that's got pretty clear, I'm drawing that horizontal line right across at about 38.39. Yep. Pretty clear line in the sand for me. Yes. Are you going really, really tight stop, and if it moves through that at all, you're getting out of that position, getting out of that trade?
Very much so.
Okay.
And I think that, I mean, again, when you're playing anything on the short side, I don't short things a lot, but I mean, if you're doing an option strategy or something like that, you have to remember that going short can be a very profitable approach on limited time frames. Yeah. But generally, shorting stocks is not a great long-term strategy because things generally kind of go higher. So with something like this, particularly given the strength that we've seen off the February low, it's dangerous to just be piling in and then just assuming that's going to work.
Yeah.
So yeah, a move, I mean, what would negate that is you see a breakout on stronger momentum, you see a breakout on stronger volume. And those are the two things I'll be looking for that would tell me, okay, short side's not working, we want to reinitiate on the long side. So, more of a tactical trade here and betting on some weakness given the divergence is kind of how I would think of it. But yes, absolutely have a clear line in the sand on the upside. For me, $40 is where I'd set an alert on Stockcharts, get a ding on your phone, time to unwind it.
There you go. I like it. Okay, my first position, I think this is going to be a record, I guess. I don't know. We've never had this happen before. I'm also playing the short side with my first pick. I'm doing it in kind of a backwards way because, admittedly, I don't like the short stuff either.
Yeah.
So I'm gonna kind of cheat my don't short things system by picking an inverse ETF. But first, I want to take the other side of that trade, and I'm just going to pull up the Qs here.
Yeah.
Again, clear line in the sand for me on the Qs. We're running into resistance. We're stalling out.
Yep.
I'm going to take the bet that power on stall is going to push us lower.
Yeah.
I think we just need some time to digest this massive run up that we've seen. One of my favorite features of the Sharp Charts workbench: turn on this little crosshair. You can see it right there, that little black button. And that gives you the ability to measure things. So if we click and drag, we can see that the Qs fell by about 25% and have rallied now, if we go to the highs from yesterday, rallied off those lows by about 31%.
Yep.
I mean, that's just a massive move in a very, very compressed period of time. I'm betting that we need to digest that, especially with some of the volatility and uncertainty coming back into this market that we're seeing right now. Looking at that chart of the Qs, I say, I think this thing is going to roll over. I think this thing is going to move lower on us. So I'm picking up PSQ. That's my first pick for this next month. PSQ is an inverse QQQ ETF. So if you buy this and it goes up, that means QQQ is going lower. So I'm kind of violating my don't short stuff rule by buying something and hoping it goes up. I'm cheating a little bit there, but with a trade like this, I'm not a huge price target guy with my normal sort of approach to trading. But on a name like this, something that's a little bit more unusual for me, I'm definitely looking for a price target on this. I'm saying I think the trade is going to unwind to here, and that's when I'm going to get out because I'm going to sort of know what my gain is. So I would be looking for this not to unwind all the way back to the lows that we saw, but just to unwind a little bit, digest some of those gains, push us lower on QQQ, which will push PSQ up. So for me, I'm kind of looking for this. You can see those two lines that I've drawn. I'm looking for about a 7.5% move up on PSQ. I think that gives us enough sort of price action to digest, gets us back up to some key levels there on PSQ, but also on the Qs as well. So this is my trade. I think that we are going to move lower a bit. I think we've just gone too far, too fast in this market. We talked about pace and resistance. The pace has just been too great.
Unsustainable.
It's just unsustainable. So I see us moving lower across the indexes, but especially with the Qs that have moved pretty high. So this is my way of playing that.
I love the idea, and I don't disagree with that. And certainly, I mean, at the very least, some sort of hedge, right?
Yeah.
I mean, this is definitely a possibility of the Qs retracing. So why not have some bet that's going to benefit from that?
Right.
I'm curious how what's your exit strategy on something like this, right? And specifically for me, I usually look at the chart of the QQQ to analyze it, and then use something like this or one of the leverage, like SQQQ or one of those as a ways of expressing or an option strategy. So how do you what do you use the chart of the QQQ to determine your exit, or that it's no longer working, or how do you think about it?
So I would be watching QQQ very, very closely, but I'm still going to track this trade on this chart.
On the chart.
I'm still going to watch it on PSQ. And for me, this is a little bit like what we just talked about with your short on Celsius. When I draw this line, so I'm using these, we've talked about this on the show before, I've actually got horizontal lines built into all of my charts, and so that dashed green line is kind of my ideal entry, and that blue line that I have down here, I save that for price targets, basically, or points that I want to add, different things like that. So in this case, I've got a green line that's trading a little bit above where we currently are, right? And those lows on PSQ are not that far off. I mean, that is coming down about 3%.
Yeah.
So I would be basically saying if this thing moves below that kind of 35.50 range, then that trade is going against me. I'm getting out. It's a very, very tight stop for me. But if we do move up above this, then I've got my price target there. It's about a 7.5% gain. I'm fine with that because, again, for me, you actually just kind of nailed it. For me, this would be more of a hedge than some big trade that I'm going to leave on. This is a short-term call on where we're going in the next month.
Yeah.
So I'm playing this with a really, really tight stop, just about 2-3%, and it's really not that big of a trade. Again, I'm not saying, okay, we're gonna retrace this all the way down to the lows, and so that's actually going to give me a 28% gain here. I'm saying let's just pick up a little bit of a gain out of the market sort of digesting where we are on the Qs. But I would definitely be watching that chart of QQQ very, very closely.
Yeah, I like that approach, and also illustrates the risk versus reward really well.
Exactly.
One of the great benefits of technical analysis. I love your horizontal line strategy. As always, it's thumbs
Draw
up.
more horizontal. I need to make T-shirts that say "Draw more horizontal lines." I'm going to make caps
soon to the Stockcharts
coffee
store.
mugs. Here we go.
All right, my second one. This is I promise the last short I will be talking about, but it maybe plays into what you just showed. Okay. I'm talking about playing Salesforce to the downside, to CRM. So. We had a couple big earnings announcements this week, right? On Wednesday, you had NVIDIA, which arguably about as good of an earnings report as you could assume. The fact that it's not up a ton more after that, I would say kind of a concern because that should be one of those drag everything up with it kind of announcements, and it wasn't. It's kind of struggled. Salesforce in a very different technical configuration, right? Because this is a stock that it's traded up to the 200-day moving average a number of times here. And in March, we broke below the 200-day. It tested it from below. Made a low in early April along with the market. Came right back up to the 200-day and failed again. And so stocks like this that are just unable to get above that point, that just shows you, in my opinion, the selling pressure that comes in when you get to that point. And that's not the kind of trend I want to follow. Now, earlier in this week, going into earnings, this looked a lot like an inverted head and shoulders bottoming pattern, right? When you have a low, you have a higher low in March, a potential higher low in late May. And this was going into their earnings report on Wednesday. I'm thinking, all right, we've made maybe the right shoulder right at the 50-day. This is a potential head and shoulders bottom. It's confirmed if and only if we get above the neckline, which is basically connecting these swing highs. That's all the way back up to that 200-day moving average. So until we get above there, I think it's not worth it. So for me, it's like set an alert for when CRM breaks above that level, and then just don't worry about it before then. Earnings did not go as well as you would have hoped if you're bullish, and we gapped down. Today, we're sort of drifting a little bit lower. So the fact that this was a potential bottoming pattern that I think now is broken, it's no longer a really good example of that because the right and left shoulders aren't symmetrical. The fact that we're stalling out anytime we get to the 200-day tells me there's not really sustainable gains above that level yet. So for me, I'm more playing the fact that that's the beginning of further deterioration. And then I would use that 200-day as sort of a stop to that if I'm playing the short side. But charts like this, if the market really is bullish, charts like this should look a lot better than they do, I guess is one of the ways to think about it. It's not a great look. And from a technical perspective, I think just suggesting more downside than upside here.
Something I always think about when I see a chart like this, I'm going back to last summer. And if you look at the 200-day moving average, you look at how this traded around its 200-day moving average, multiple times bumping into it from the underside, and then once it did cross through, came back down actually really quickly, but came back down to test that 200-day moving average. So when I see a chart like this, which is, again, playing with its 200-day moving average. This is a symbol for whatever reason that seems to really respect that 200-day moving average, has a history of respecting that 200-day moving average. Sometimes you see a name that doesn't do that, doesn't have that sort of relationship with its own 200. Maybe it's different, maybe it respects its 50 more or some other moving average. But in this case, I think it's key that CRM seems to really like to trade around its 200-day moving average, and that's coming back into play right now. So it's interesting that you're bringing it up. This has been a disappointing stock for years.
It's not been a great chart, particularly in 2025. And after finishing last year so strong, it felt like wow, this is maybe breaking out big time with some upside potential, and it hasn't done it.
Do you ever zoom out, even on a short play like this? Would you ever zoom out to the longer term weekly, kind of bring in some of that longer term price history?
For sure. Oh yeah, for sure. And I mean, if you look at the weekly chart of CRM, I mean it really is like this failed breakout story, right? And that's what I'm saying is like toward the end of last year, it really looked like, I mean, a big like cup and handle pattern, multi-year pattern breaking above resistance, and just didn't sustain those gains. And if you think about how the market shifted in 2025, CRM is a great illustration of that.
Yeah, it really is.
Yep.
Good pick. I like that. I think it's been a disappointment for a lot of investors. So playing that thing on the short side, that makes sense, especially after that earnings report.
Yeah.
Okay, my second pick is going to be something out of the technology sector. I know we talked about tech not actually being that strong at the moment, and some of the sector rotation we're seeing into more defensive corners of the market. But this is a name that's bucking that trend of its own sector. This is Guidewire, GWRE. Ooh. And just a beautiful uptrend, consolidation within that uptrend, and now breaking out. Actually, on the day today as well, up a little bit more than 1.5% on a day when the market is moving lower, and a lot of these tech names are getting hit pretty aggressively. So this thing just continues to trade well. I love how much of a rectangle this is. I mean, if you just kind of draw that, we could annotate it on the chart really quickly, but if you just kind of visually look at these horizontal levels that it's testing, look at the horizontal levels it's testing up top, I mean, you can draw a box around this so easily, and clearly within a longer term uptrend. Outperforming the market, we can see that with the panel up at the top. Relative strength is continuing to stay strong in this name overall. There's just a lot to love here. Moving averages for me, all in the right order. It's actually bouncing off of its 20-day moving average right now, which again is another little bullish sign for this thing. I guess the only thing I could complain about with Guidewire here is volume has been pretty light. I don't love to see that, but again, we've talked about this on the show before. I'm not a huge volume guy. Yeah. I think the story on volume has changed in the last few years. So for me, this is the name where you're just drawing those horizontal levels. If it breaks out above prior resistance, still probably has a little bit more room to go. I've set my potential entry here kind of right where we're trading right now. I might actually edit this more up to the highs. I'm being a little bit more sort of risk on here, playing that a little bit lower. Yep. But I think if you want to be a little more conservative, you wait until this thing really does break out more around 219, maybe 218. But you've got some nice meaty price action from me. One thing I'll stop here and mention too, we've talked about this on the show in the past, but I like to use these red lines that are actually, again, built into my chart templates. I use those to mark stops. And for me, the system that I trade and sort of the probability approach that I have, I typically like to have 2 stops on any trade, something around an 8% level and something around a 12% level. And one of the things that I like doing with these levels is marking those on the chart. So it gives me actually a really nice way to see how volatile this is when I'm marking those 8 and 12% drawdowns on any trade that I'm sort of planning out. If that 8% level was right up here, then I know that thing is moving way too much for me to trade. Yeah. This is still giving me some nice meaty price action to trade through and some moving averages to trade through as well. This thing can actually drop below the 50 and below the 100, which are both rising and trading in the right order, and it's still not going to get stopped out for me. So enough price action for this thing to digest it. If we moved it up a little bit, those stop levels would come up a little bit. But this is a trade that I sort of could see myself putting on. Just a really nice potential breakout here in a market that's sending a lot of tech stocks lower. So this thing bucking the trend definitely tells me something.
I think a lot of people get trapped into thinking a little too kind of top down about things, right? So if deciding technology is going to work or not, then if you think technology is under pressure, so I ignore all software names, that seems a little much for me, right? I always say it's always a good time to own good charts. Yeah. So if you look at a chart, look at like the last 5 years, this has been just a fantastic stock, trading above the 200-day moving average, riding it up a bunch of time. It's just a great breakout, and it's sustained those gains, right?
Yeah, it really has.
The most recent pullback, right, where it pulled back to like 165, 170 there, and just a number of times you have really clear support It sort of bounced off of that level, which sort of created this basing pattern that you described.
Right.
It's a long-term winner, and I think one of the things I've learned over through a lot of bull and bear cycles, there are charts like this usually in any environment.
Yeah.
Even if the market as a whole is struggling, there are stocks that kind of look like Guidewire.
Yeah.
And are consistent gainers, right? You think of those as sort of core positions you want to build a portfolio around. I wouldn't have a problem with that, and I wouldn't avoid something like this because it's a software name or a technology name. If it's a good chart, it should deserve a place in your portfolio.
We get this question a lot. For me, whenever you're trading something that's in a sector that's a little bit unloved, or maybe you're starting to see some rotation out of that sector, it's a reason to stay more vigilant with that name, but not a reason to avoid it entirely. Again, you can't throw the baby out with the bathwater. You can't say, I'm going to avoid all software names, all tech names, just because XLK is breaking down.
Yeah.
It's a reason, though, to stay vigilant, because oftentimes you will see if tech continues to slide, they'll sort of start to come for everything in the sector. So good reason to stay vigilant, but not a reason to totally avoid any sector just because the majors are kind of doing poorly.
And good reminder to use the scanning engine to find things like this, because they'll be in sectors you may not expect, but a good chart's a good chart.
Yep.
Speaking of good charts, my first sort of long, not short idea,
hit me.
Biotech. I'm going Gilead, GILD.
Okay, yeah.
Now, healthcare, speaking of weak sectors, healthcare is pretty rough and not my favorite side. I would say the two clearly underwhelming sectors recently have been energy and healthcare. I'm not a fan of big bets in either as a sector bet.
Yeah.
But within something like healthcare, you're finding areas that are pretty strong. And at times it's been things like medical supplies or equipment, kind of the non-pharma names.
Right.
But biotech in the last couple of weeks has actually started to improve. Not all of them, right? I mean, some of the charts are still pretty ugly, but GILD, pretty decent. And what I like about what I've seen here, looking at the chart of Gilead, it's testing a Fibonacci level in April and May. So if you take the May low to the May of last year to the March 2025 high, and then 38.2% of the way down around 96.40.
Yep.
That lined up really well with the November peak from last year, which I think provides maybe some symmetry here. That's where we pulled back in April, in late April, in early May. It's all kind of bouncing off of that support. So you have a clear kind of floor where we're at. The 200-day moving average is kind of right about there. So I think that defines kind of your downside risk, because below there I'd probably get out of the way. But I love the bounce off of that support. I like the break back above the 50-day. We've cleared the April swing high. We're kind of continuing to the upside.
Yeah.
I would love to see, further follow through, particularly above the early April peak. We're kind of right there. I would love to see stronger momentum, because the RSI is kind of right at 60, which is kind of the upper end that you would expect in a bearish phase. But if you start powering higher on stronger momentum, I think all of a sudden this is a really strong chart within a struggling sector. And it's funny, we kind of back-to-back on with, sectors that may not be your favorite, but good charts in any group, I think, are worthy of your attention. So I like the bounce off of support. I like the setup here. I think worthy of an upside move, potentially.
Yeah. So you and I both use the scooters.
Yep.
The Stockcharts technical rank. That's our way of kind of ranking things within a group. And I was actually looking at the sectors this morning and kind of chuckled to myself, honestly, because XLV, the healthcare sector, I think the scooter score right now is about a 4 out
That's
of 100.
Not good. That's not good.
So it really almost can't get lower than a 4. That's about as bad as it can get.
Yep.
Does that actually at some point almost become a tailwind for something like Gilead, that healthcare is just so bad that it might actually start to find some buyers here that are stepping in?
Possibly, right? And I guess if you think about, I have a quote on one of the monitor in my office where I'm looking at stock charts pretty much all day. A quote from Hamilton: "Follow the money and see where it goes." Right? You follow the flows of funds, and best way of measuring the flows of funds is by looking at price action, right? Because if there's demand for stocks, it's going to go up. So if you think about things like technology, industrials, consumer that have done so well, and if people do start to unwind of those positions, where are they going to go? And I think you have choices besides going out of equities, right? If you stay within equities, you can go to like pure defense, like utilities or REITs or something, or you go to beaten down areas of the market that may be starting to improve.
Yeah.
And that's energy and healthcare, right? I mean, and again,
Stand out.
I'm not a huge fan of energy yet, but it's like you're starting to see some maybe bottoming patterns. I mean, some of them aren't that bad.
Right.
So I think it's more opportunistic right now within those sectors, but that is a scenario you could see that technology, growthy sectors struggle. Maybe it's some of these beaten down sectors that have been down so much that they're starting to look like decent valuations and other measures.
Right. Yeah, a strong stock within a sector that might actually kind of catch some turnaround money. That's kind of interesting.
Decent.
Yeah, that's not bad. All right, my next pick is going to be one of the big guys. I'm going with Meta.
Here we go. Okay.
Meta is really interesting right now. This is a name that for some reason I just kind of always avoid, and I don't know why. I'm just kind of always like, oh no, it's too obvious. I can't own Meta. I can't be trading Meta. I can't have that on the list. But this thing looks great right now. And especially, I think, with Meta in the last couple of years clearly going all in on AI and all the stuff, and we're continuing to see that trend really start to work. And things like NVIDIA, with the strong earnings report, to me, I see that as a sign that some of these plays that Meta has been working on are going to continue to play out. But step back from all of that. That's kind of the hopeful side of this game. The chart looks great. I mean, this thing has recovered really beautifully. We've rallied, what is that, about 31% off the lows.
Yeah.
We're now coming back up, kind of testing some prior resistance and holding that pretty nicely, though. We're trading above key moving averages. This thing is trading above its, all of the moving averages that I follow. But most importantly for me, I think in the short term, it's trading above the 20. And it's really actually, every time it's come near the 20, it's found buyers and it's found buyers and it's been shot higher. So I like this thing technically. I do think it maybe needs to digest these levels just a little bit. It's had a nice run, but the relative strength is the other thing that catches my eye. So off the lows, this thing has been heavily outperforming the market. So buyers are liking Meta. There's demand for this thing, and I like to see that. So a lot to like technically. I think thematically too, Meta just kind of makes sense. It continues to make sense for the world that we're living in. And of all those majors, of all the crazy huge companies out there, I think Meta is one of the ones that actually looks the best right now. Certainly better than something like Apple. So it's
Which
a great
is a
chart.
low bar.
That's a low bar. That's a low bar. But
yeah.
I just really like this chart. And again, within kind of this broader uptrend. If you take sort of look through this decline that we've seen this year, this is a nice broader uptrend, especially over the long run too. We've been stepping back and looking at some weekly charts here. So if you look kind of off those 2022 lows, Meta has just been a flyer and heavily outpacing the market. I think that's going to continue, and this is definitely one with some nice risk reward levels that you could trade against right now.
It's so funny because sometimes when we've been doing this discussion on these monthly exercises, the Magnificent Seven kind of basket has looked very similar, right? It's been kind of this homogenous group.
Yeah.
And then randomly, like
together.
Tesla's an outlier, but like the rest of them all kind of look the same. You're actually getting a decent amount of differentiation right now. And Meta, I mean, if you rank them, I would assume Meta's, I don't know if you include Netflix as one of them, that's probably a little better just because it's making new highs, but Meta's pretty good. And compared to like Apple's and others that have just been unable to regain, Alphabet kind of struggling to get above. Meta's kind of breaking above moving averages, breaking above resistance, and holding it. Yeah. So I think the best scenario I would say for the markets here, names like Meta really have to hold this recent support. I mean, I
really do need it.
If you're looking for a sign besides just the S&P going lower, it's like the Metas of the world. There's such a big weight that I think a lot's relying on these holding their recent gains. I hope so.
We mentioned the scooter too. I got to point that out on Meta. A scooter of 80 to me is kind of the sweet spot. It's not too high, but it's not something down in the 50s. That's kind of in the neutral zone. It's certainly not lower than that. Yeah. A scooter of 80 in a stock that is rising, that's outperforming the market. That is kind of the sweet spot for me. I love to see that. Yeah. So really, really nice relative strength on this thing. Just a great chart. If this thing can move higher, again, I think you've got some really nice levels to define your risk. Yep. You can plan a trade around this thing, and it's definitely one to watch for the next month.
I like it. And arguably everyone should be watching that one. That's
I mean,
key
it's
one,
a tough one to not watch.
Yeah.
Right. Yeah.
But I like the call. I appreciate it.
Okay.
All right, we are going now completely different from Meta and going to Costco.
Good pick.
So COST is pick number 4. I don't think we've tracked really well all the names we've ever picked, but Costco might be one that we've picked the most as a two-person team.
Last month.
Yeah, and I've done it before in previous ones. So it's definitely like a Hall of Fame monthly exercise name.
But you know what? Just to justify that a little bit.
Yeah.
Pull up a long-term chart of Costco, and I'm not talking like 5 years. I'm talking take your weekly chart and change it to like 20 years.
Okay. I mean, no, it's a good chart.
What? I mean,
I'm not saying I picked it. I'm not saying it's a bad.
No. But it keeps coming up because it keeps doing this.
Yeah, for good
going
reason.
Up.
And I think that it's a great reminder, as much as we get so drawn into tariffs and headline risk, short-term noise, let's not forget the value of equities to generate long-term gains, right? And that's what I feel like the longer you invest, the longer you appreciate the benefits of a really long runway.
Yeah.
Names like Costco have just continued to come to play, like kind of year in, year out.
Yep.
And I think yet again, it's setting up with a pretty constructive chart here.
Yeah, it is.
So earnings this week, and earnings were pretty positive, right? And again, with all the tariff uncertainty, as much as we can debate on individual headlines and what they might mean, at the end of the day, it's how are companies going to profit in whatever environment they're presented with, right? And how do they navigate it? And the report from Costco is, not a lot of concern and the ability to grow earnings through this sort of period.
Yep.
From a technical perspective, the pullback in March and April got us down to the 200-day moving average. We basically held that. We didn't really follow through to the downside on those tests. And now it's sort of regained the upside momentum. The RSI has been above 50 since mid-April. So I think coming out of the lows, you saw strong enough momentum. And now we're actually, with today's bounce higher, up about 4% as we're recording. It's getting really close to the February all-time high. So I think with a name like this, again, to your point, I think the long-term story here is incredibly strong. I think the fact that we had a good earnings report that just reinforces, companies actually could navigate through this crazy headline period and actually grow their businesses and have sustained gains. Costco's saying that that's possible from a fundamental perspective. I say from a technical perspective as well. Yeah.
You know what? Can you do me a favor, or I can pull this up too if the team wants to flip back to my screen. But put a 20-day moving average on Costco and look at how. You know what? Here, I'll do this right now.
Yeah.
Let's kick off all of these other moving averages. Okay. So now we've got. If the team flips back over to my screen, we've got a 20-day moving average on Costco. That's it. Yep. Look at how this thing has been respecting its 20-day on this move higher.
Yeah.
And now, I mean, kind of popping off. It did dip, opened lower. But that thing is just moving off of that 20-day. Really, really interesting. This is a great pick. It's a great company. It's in one of those weird spaces where it sort of straddles sectors. We've talked about this before. It's like a staple-y consumer discretionary because it just does everything.
It's a little of everything, yeah. And it's a reminder as to how, bucketing stocks into individual sectors is kind of a fool's errand. Like it's such an imperfect science, but Costco is one you could argue is in a number of different sectors, but whatever sector it's in, the chart looks pretty good.
No, I think it's a great chart. I mean, there's so much technically here to like too, just bouncing off of prior resistance and everything like that, moving above that 20 now really nicely. God, good pick.
Agreed.
It keeps coming up for good reason.
It keeps coming up.
It really does.
All right, your fourth.
All right, my fourth is going to be Booking Holdings. Someone quoted this the other day. If you put up on a performance chart, since Airbnb went public, you compare Airbnb and Booking. Airbnb has done absolutely nothing, and Booking has just flown. And I remember conversations when Airbnb went public of people saying, well, that is totally, the end. Airbnb is just going to dominate everyone. And it has not been the case.
Nope.
Booking Holdings here is one that's a little bit different for me because it has made the breakout. So the trade that I'm kind of structuring here with that green line, it's moved through this. I'm admitting that. The thing is, a lot of times, especially if we are going to see a market that's going to cool off a little bit here, digest some of these gains that we've seen, we might see Booking continue to move higher a little bit, but hopefully come back in and test that breakout level from the top. If you can see a breakout, a retest, and a bounce, That to me is my ideal setup. That is the thing that I love to look for as sort of the dream trade. So for me here, you've got a really nice risk reward level to define right up there at the, God, there's so many numbers in this stock. It's funny when you see a stock that trades for thousands of dollars. It kind of throws me off the first time. I go, wait, where's the comma in there? Anyways, you see that kind of 53.25 level. That to me is kind of the sweet spot for this trade as far as an entry goes. If we can see this thing move back down and test that from the top, I think you got a really nice trade here. The relative strength on this thing in particular is what catches my eye.
Yeah.
That is about as arrow straight as you can find out of a relative strength line, just heavily outperforming the market and continues to do that session after session, week after week. So I love to see that. Moving averages also in the right order for me, which is really, really nice. And plenty of price action to kind of let this thing sink back into and trade around to structure a trade. So lots to love here. Again, I mentioned that sort of sweet spot scooter in the 80s. Yeah. So this is kicking around right around 81. A scooter of 81 on something that is breaking out and heavily outperforming the market. That's just that's a great kind of sweet spot for me. Pays a little bit of a dividend too, which is kind of nice. But I think there's a ton to love about booking holdings here.
It's an interesting chart. I didn't throw CCL in there. That's not my fifth pick, but that was an honorable mention, which kind of same kind of travel tourism play. It's sort of mixed right now. I mean, it's not like an entire great theme because like some of the airlines not great. Yeah. Cruise lines not all great. I mean, they're kind of all over. Hotels not particularly strong. Yeah. But some of them randomly look really good. And I think this is where being a stock picker within that theme is pretty good. Yeah. I know you're not a big volume guy, but the only volume indicator I look at pretty regularly is the Chaikin money flow. Yeah. And if you look at it on this chart, it's actually been pretty constructive. Yeah. Which encourages you, right? I mean, a name like this is going up because there's accumulation and there's people kind of buying in, and it's making new highs, and people are still buying more of it. That's where I think looking at the constructive volume readings pretty good. Accumulation distribution, which you have on there, pretty good, right? This is one of the few that I do look at. Very similar. So I think the fact that you're seeing this in a period of accumulation is a stark contrast to some of the other charts we've talked about, which are not showing that. Yeah. So I think as long as that continues, that's a pretty good place to be. And great relative strength, to your point. Great relative strength. Mm-hmm. Agreed. You know, I got to pause here for a second because we've been highlighting a stock charts feature that's probably the most important thing that you and I use on this page. And we haven't actually been talking about it. These little buttons that Dave and I keep clicking on the left side of the chart, these are called style buttons. Chart styles for us are kind of chart templates, if you want to think about it that way. Take all of the settings, all the things that you want, like relative strength, what size the chart is, what your moving averages are, any indicators you want. You can take all those different features and bundle those up as a chart style or a template that you can reuse. You can then save any of your favorite chart styles as these little buttons right here. And you can even color them, you can assign little labels. What this makes it incredibly easy to do is take those kind of go-to chart settings, those templates that you like to use, and flip between them really easily. So as you've kind of seen, Dave and I have daily styles and weekly styles saved on our style buttons here on the left. So I can look at a simple daily chart right here, and I'm on that kind of D1, daily level 1 style for me. What I just did a moment ago, I've got a more complex version of that chart that actually brings in other indicators at the bottom, like the RSI, accumulation distribution, the scooter score, different things like that. I've saved that as a style button, so I don't have to go setting up a new chart every single time. If I'm on this simple chart, let's say, and I go, well, what's the accumulation distribution look like? I can save that as a little button, give that a click, and scroll down. Now I can see that indicator on this chart. If I want to see a long-term weekly chart, I've set those up as style buttons right here. So here's a 5-year weekly chart. Here's a 15-year weekly chart. I can really, really quickly jump between some of those sort of crucial chart templates that I have, whether they're time frames, indicators, moving averages, whatever it is for you, you can use those. You can even use them for different security types. So maybe you want to have different stocks or different templates for stocks versus ETFs versus indexes, those kinds of things. So many different use cases of these. But it's an incredibly powerful feature, and again, one of those things you got to be a Stockcharts member to get access to. So if you're not a Stockcharts member, make sure that you sign up for that free 1-month trial. Why not
Good time
today?
to highlight that. You're doing the same thing.
I was going to say you have to. I mean that's been a huge productivity enhancer. Getting
streamlining everything.
Better comfortable with those, and especially with indicators and techniques that you don't use all the time, but like volume for me, it's like ooh, what's the volume? You know, there's a
Right.
time when I want to do it and just
Right.
jumping over and doing it quickly.
You don't have to have everything on one chart.
No.
You can actually kind of break them up and say, I'm going to use these indicators when I want these indicators.
Yeah, that's right.
Yeah, it's a good strategy.
Yep. Agreed.
We are on to your last pick of the day.
Yes.
Number 9 between the two of us, number 5 for you. What do you got?
My last pick, we're going to the gold space. I'm going
I was waiting for
AngloGold,
it.
AU. I don't have a position in this. I do own plenty of gold things like the GLD and
Watches
IAU
and
kind of
chains
things.
and
Not that
earrings?
kind of gold,
Okay.
but gold ETFs and stuff I do. But AU is one of them. Not all the gold stocks look exactly the same right now. And the GDX, if you're not really, have high conviction, that's a decent way to play the space. I think if you want to look at equities, but AU in particular is an interesting setup. I think this is setting up pretty well as a what we call a bull flag pattern, and that's basically when you have a run higher, and then you have kind of this parallel downtrend channel. And I kind of like to highlight it like this, where you draw the first line, sort of do it that way. And then on the Mac keyboard, you hit the Command key, click on the first one, it gives you a parallel one. So it's really easy to draw that way. And that's how I kind of like to save it. And so what you're basically saying here is we've had a run, basically from the end of last year. Note how strong it performed, by the way, in the first quarter. In the April market low, it's accelerating to making a new high. But now we've cooled off a little bit. And this parallel channel of lower highs and lower lows becomes a bullish pattern if and when we can break above that upper boundary. And that's why I think it's important right now. If what you're saying on your first chart and the Nasdaq's rolling over, what rotates higher? Gold, Bitcoin, arguably. I mean, these are areas of the market that are kind of low correlation to equities, particularly gold. And so I think you could get a bid there. A lot of these names have done very, very well and have pulled back, just like gold pulled back to its 50-day, bouncing off of there. So I think it's very, very close to a very constructive breakout, which would be a bull flag pattern. What's interesting about this is the way you project the upside objective. If you know your chart patterns, you take the length of the flagpole, which would be basically all the way from the December low up to that peak, and you project it from the low of the pattern, which means this is a stock that could compound gains much further. So it's interesting that you're getting a bullish setup in some gold stocks right now. Newmont, not too dissimilar from this one, at a time when a lot of technology and growth names are setting up more on the downside. Could be an interesting play on a space that might start to work again. So interesting setup, a bull flag pattern on AU.
Yeah. It's also one that's coming at a really interesting moment too, because I like to sort of think about that as a factor or an observation, a checklist item, right, on what you're seeing on the chart. And if you add in a couple other checklist items, you've got the break above, well, close to the break above the pattern. You also have a bounce off the 50-day. You can see that right there. And if you maybe even add another line and do a horizontal line, you've got prior resistance becoming support. And it's all actually happening at the exact same point on this chart. So when I see that sometimes, when I see this sort of convergence of things happening, support and resistance, break off a moving average, and a break off a pattern, I mean, there's like 3 things there that's just checking, yep, probably moving higher. I like to kind of add up all those different factors, all those different observations into something more powerful. This is a great one.
It's a good one, I think, and I appreciate what you're saying. This also, I think, provides kind of a natural stop, like a really clear point. As long as it holds that, it's still pretty constructive. You start breaking that level, though, you probably avoid it. Decent setup, good upside potential.
Yeah, that's a great pick. A great pick.
Your last
I was
pick.
Waiting for gold. I was waiting for something
we got there.
To
we
gold.
got there.
Yeah,
okay.
Exactly. Okay, my next pick, my fifth and final here, it's going to be JPM.
Ooh, okay.
This, to me, again, is just an incredibly constructive chart, continuing to outperform the market, which is something that I like to follow. Moving averages close to the right order. I want to see that 50 continue to recover and actually get back above the 100. But all of those moving averages are actually moving higher. You can see that really clearly there. There's also a little feature of the workbench down here called the zoom thumbnail, which is actually a nice little way to see this. You can turn on this little sidebar and it'll show you that kind of zoomed in view. In this case, actually, those moving averages are too far out of the window. You can't even see it. But it's still a nice way to kind of zoom into some of those bars. The stock is just continuing to move back towards those all-time highs. I think that deregulation is still a theme that's going to continue to benefit JPM through this administration. So I think this is one to watch, not just for the next month, but really for the next couple of months and even years. If we do continue to see deregulation, come into play, you've heard Jamie Dimon talk about that, the impact that that's going to have.
Yeah.
So I think that is definitely a tailwind for JPM. But nice consolidation here within a longer-term uptrend. This is the type of thing that we haven't seen out of the financial sector in a long time. So I like to find these names that are sort of bucking that trend. But JPMorgan, I mean, you can struggle to find a company that's sort of bigger, more important, more valuable. And for a name like this to be setting up nicely with sort of a potential for me to structure a trade on that, and it's not like JPMorgan is going to disappear tomorrow. It's something I like to see. Technically, I would like to see the volume get a little bit better here. I don't like to see that sort of decreasing volume as the stock is moving higher.
Yep.
We are digesting these gains a little bit, so the decreasing volume isn't quite as bad. But still, on some of these moves higher, I want to see volume increasing, especially as we get back up to those highs. I want to see people really, really excited about buying things up at these levels, not selling them off. So or just steering clear. But yeah, it's one that just continues to catch my eye. As you're going through those charts, it's tough. Kind of like we said with Meta, it's tough to not stumble across a chart of JPMorgan. It's tough to not stumble across the Mag 7.
Yeah.
And so this is one that just keeps coming up for me. And every time I look at it, I'm like, God, that chart's just continuing to look good. That's God, why don't I own JPMorgan in some of these longer term accounts or something like that?
Yeah.
So even for right now in the short term, I think a lot to like here on JPM.
It's also pulled back to that 20-day EMA that we talked about.
Yeah,
in
exactly.
previous examples as well. And I think that
really bounced off of there.
Yeah, and I think that's the bull case on charts like this, like a brief pullback there, which makes sense. Again, in an unsustainable rally, these brief pullbacks to something like the 20-day exponential moving average, really good kind of re-entry point if you're playing the long side.
This is where you can really see that in the Zoom thumbnail. So there's your 20-day moving average, that kind of dashed line. It's sort of blurred out on my chart a little bit because it's not primary for me, but actually in an environment like this, it starts to become more important. But you can see that move off of that 20-day moving average. One other thing, because you're kind of reminding me of it right now. These are the times when I love using candlesticks. You and I have kind of debated this over the years, candlesticks versus OHLC bars.
Yep.
I love candlesticks because in a moment like this, it's telling you about what's happening intraday. So it's not just, kind of how is this thing moving from day to day, but you're seeing that in a candle like this on JPMorgan. Gets slammed a little bit in the morning, opens on its 20-day moving average, moves a little bit lower, and then just absolutely rallies back. When you start to see so many hollow candles like this, it starts to tell you something. Whether you're looking at the indexes and you're looking for those hollow candles, or in a sell-off environment, you're looking for those solid candles. But seeing those kind of hollow candles in a moment like this, so many of them piled up there. You can see that in the Zoom thumbnail.
Yeah.
It's part of the reason that in these environments, I really like using candlesticks. But
it's a visually rich way of demonstrating the price data.
Yeah,
Agreed.
It definitely is. Dave, that brings us to 10.
That was
Pretty
awesome.
fun.
Yeah.
It's always fun.
Found some good charts around there, I think.
Yeah. What else are you kind of thinking about right now? What's top of mind for you? What wisdom do you want to leave us with? You've always got something crucial to say at the end of this show.
Ooh. Thanks for that setup.
Yeah.
I think, to be honest with you, this is one of those times when it's very easy. Just in the last 48 hours, we've had headlines that have completely appeared to unwind the entire foreign policy decisions of the U.S. And then immediately taken back. So this is one of those times when, even though the VIX is below 20, it feels a lot more volatile, right? The emotional volatility is high. So I think, for me, it's very easy to get drawn into the short-term speculation of what one headline or what judge's decision, would impact. At the end of the day, price is a great way of understanding how investor psychology is shifting. And I would just remind people, at the end of the day, a tariff being announced or not, on its own is not going to have a ton of impact. It's whether companies can grow earnings given the table that's been set. And so I think charts and understanding how companies are reporting earnings, how that's reflected in price action is more important than ever. So don't minimize the value of charts at a time like this. Arguably, they're crucial because price action will tell you a great deal.
Yeah, absolutely. We built a feature recently, our market summary dashboard, new tool. And it's really built for this moment. You've been talking about it a little bit. I know I've been highlighting it on different videos we've been doing and things.
Yeah.
But that market summary dashboard is built for this exact moment where you need to drill down below just what the major indexes are doing.
Yeah.
If you want to truly understand what's happening in the market, you need to go deeper. You need to go beneath the surface. You need to understand things like breadth and sentiment and volatility. You need to really drill into the sectors and see that rotation from offensive to defensive, some of those key ratios that you and I like to follow, and so many other technicians. It's all on this market summary dashboard. So I think my takeaway for all you guys is if you haven't seen that page, start using it, go explore that tool. Maybe the team can throw it up. I'll give you kind of a quick breeze through this. But everything truly that you need to really understand every corner of the financial markets is on this page. Starting with the major equity indexes, but also zooming back to some of the global indexes, global ETFs that we like to follow to understand what's happening. And then you really get to drill into different corners, different sort of market factors like growth and revenue and momentum and value. Dave's market models are on here to really understand, the short term, the intermediate term, the long term trend of the markets. We talked about, breadth. We've been having these conversations about breadth and stocks above key moving averages. All of that stuff
That's
is
huge right there. I love
that.
that.
I absolutely love this visualization. And you get to drill into, like we said, sentiment, key ratios that we like to follow, offense and defense, to really understand the flavor of the market. Again, it's not just about is the S&P 500 going up or down. It's about where investors are positioning beneath the surface. Drilling into those sectors and seeing really what's happening. So much on this page. It's been a huge hit, but I know you've been enjoying it too.
For sure.
And I think it's a good thing to highlight right now because we see this moment so often where the headlines start to pick up. We see crazy things in the market, uncertainty, and people start to say, what am I supposed to look at? I get confused when I'm reading headlines and I'm looking at the S&P 500.
Yeah.
How do I understand what's happening at a deeper level? This is really the tool to do it. So,
Agreed.
once again, another reason to sign up for that Stockcharts membership if you are not already. Take that free 1-month trial. Dave, I want to thank you for being with me. This is always fun to do this with you every month.
Love it.
Drilling into some names. Also seeing, your process, the way that you're thinking, not just about the markets, but individual names, how you structure, trade ideas and different opportunities that are out there. So again, as always, thank you so much for being here.
Of course.
A lot of fun. Viewers, I want to thank you guys for being with us today. Of course, you've been watching David Keller, Chief Strategist at Sierra Alpha Research. My name is Grayson Roze, Chief Strategist here at Stockcharts.com. So much strategy going on in this room. It's just incredible. And I'm so glad that I wore my shorts here for you because we got a couple of short ideas for you there. So if you liked this video, give it a like down below. Leave us a comment. Let us know what you are following for the next month or so. We're going to be back here again to do it next month with you. So tune in for that. But of course, remember, subscribe to the channel. We got so much great content. Dave is doing a weekly video on there. Always something that I tune into. We got so many other great contributors. So be sure you subscribe to the Stockcharts TV channel and stay up on everything that's happening in the markets through the lens of technical analysis. Again, I want to thank you guys so much for tuning in. We will see you again soon. But until then, as always, keep calm and chart on, my friends.